Hey guys, I'm thrilled to have back on the line Bob Chapman from the International Forecaster. Welcome back, Bob.
Well, thank you very much. And again, it's very nice to be here.
Well, we love having you, and I tell you what, you've got, as you know, Bob, quite a following. You know, as Orwell said, in a time of universal deceit, telling the truth is a revolutionary act. So thanks for being a truth teller.
No, I'm a revolutionary.
Well, we could use more of those. I'm really glad to have you back on the line this quickly because I have some really specific things I want to talk to you about. Let's first talk about precious metals. Now, silver is well past 46 at this point, and I'm getting some questions from folks, and I want to run one by you. You ready?
I'm ready.
Okay, so it goes like this. There's a fella named Marco who sent me a personal message via my YouTube channel, and he's asking this. People say that when silver goes parabolic, we have to get out before the bubble bursts. That makes a lot of sense, but wouldn't it be cutting ourselves short if we jumped out too fast when it goes parabolic? Specifically, if the economy is in utter shambles and nothing seems about to change regarding this dismal situation, wouldn't silver continue to be an investment asset protection place of choice? Wouldn't that parabolic movement continue for as long as the economic predicament remains unstabilized and downright horrific? Thanks, Marco. What's your take, Bob?
Well, Marco, I think that's a great question, and I think you already have the answer, and I think you should take that answer and send it to the people who think things are going to go parabolic and they're going to collapse. I mean, Jimmy Rogers said that the other day.
Yeah, and just to weigh in there, I mean, what I heard Jim Rogers say is that he expects triple-digit silver, but he would be concerned if it sprang directly to 100 just in 2011 with sort of a parabolic chart. He'd rather see it kind of correct. I think he'd rather see that stair step, Bob, and maybe we all would. But what's in play here is the shorts are getting crushed. J.P. Morgan is really under massive threat right now, and the world knows it.
And so let's bring it to them. It's like a war. They're wounded. They're running out of ammunition. They don't know what to do. They're confused. And so what do? Shoot them down. And that's the best thing because they're the largest holders in the Federal Reserve. And they really run the Fed. There's other big players as well. And so if you can take them down, you've done a whole lot. We can thank, in part, Max Kaiser for that, for taking delivery of physical silver. And that's helped a great deal. And so they're in a position with HSBC where they have illegally, no matter what the CFTC says, rigged the market, and they get caught. And there's no way out for them. So what are we talking about in losses right now? We closed over $46 an ounce yesterday. And incidentally, I bought silver yesterday, just to let you know what I think.
I bought some. I bought 50 ounces over the last 2 weeks, Bob. I'm with you.
All right.
I'm not selling.
Stalwart.
The point is that we want people to know, and I do feel some responsibility to tell people what I'm doing. And, you know, here's the thing. I started talking about silver and gold on my channel when silver was back around $10, $12 an ounce. So anybody that's been following, you know, my advice has tripled their money or better, quadrupled their money or better. So I think that it's not my responsibility at this point to tell people when to sell. That is their own personal choice. I got them in low. You got them in low. Okay, whatever they do from here is up to them. Having said that, I do feel it's my responsibility to be honest with people about what I am doing. And the minute I start selling, I'll let people know. What I'm still doing is buying in regular intervals regardless of price, because until the Federal Reserve stops this shenanigans of debasing our currency by printing out of thin air, why would you stop buying silver? Or more importantly, why would you sell?
Good point. Well, we closed at 46.69 in the nearest active month, which is May, up 222 on the day. And so the question is, at this point in time, how much money, if there was a capitulation by Morgan and HSBC, how much money had been lost? I figure it's about $90 billion. And at a move up to $60, it'd be $140 billion. Now, those figures may or may not be accurate. The point is, it's a lot of money. And so, what are the choices here? Well, they obviously are not trying to cover their shorts. They're trying to extricate themselves, and it's not working. Nobody's selling.
Right.
The next thing is, how do we go about settling this thing? Well, they can partially settle and say, look, We don't have the money to cover this thing. We were naked. We have no silver. Do you mind if we settle this thing for 35 cents on the dollar? Second choice, just outright default. Third choice, the Fed steps in, which is owned by these banks, and says, we're going to pay it. We're going to come up with the $90 or $140 billion, and we're going to pay the people off in cash because we don't have any silver either. Mm-hmm. And I don't think that the American public don't like that very much because they're the ones who are on the hook. And that might get beaten down, so to speak. And if it is, they're going to have to default. All right, let's see what's going to happen in default. Number one, silver futures and perhaps gold futures will stop trading on the Comex and the LBMA in London. Number two, no gold and silver options will trade. Number three, no derivatives will trade. Number four, who's holding piles of futures, options, and derivatives? None other than SLV, the Exchange Traded Fund, and GLD, the Gold Fund. You see what kind of fallout we're looking at here?
Yeah.
This very moment, I can promise you, behind the scenes in Washington and New York, they're having these meetings. Oh my goodness, what do we do? And that's the box that they're in. And no matter which way you cut it, even if there's a settlement of some kind, because they can't pay that kind of money, even if there's a settlement, it's going to deeply injure the paper market. And the silver and gold physical markets are going to take over as the real markets, because people won't trust the paper markets anymore. And the only thing that'll be left is gold and silver, coins, bullion, and shares. And that's it.
Right. Well, and the shares are being suppressed too, because I think for anybody who's got some high-quality mining stocks like I do, as gold and silver in particular have had a tremendous run over the last month, the mining shares are not responding in kind, and they ought to be. Now, there's a lot of evidence to suggest that hedge funds and different arms of the U.S. government are suppressing the mining shares via naked shorting in an effort to try to stem the hype and to stem the attractiveness and to try to keep those things out of a bull market. What's your take on these mining shares, Bob? When are we going to see these things pop?
Well, first of all, it's exactly the same as yours. And the hedge funds are acting on orders from the Treasury or the Fed, one or the other. And they work together all the time, incidentally, and they're outside the jurisdiction of the United States. They can do anything they want. The whole thing is crazy. I mean, why would one even have regulations if you're going to allow people to do that?
Yeah.
And so, with that said, they are doing that. And they will continue to do it as long as we allow them to do it.
Yeah.
And how do you stop it? Everybody send a letter to every congressman and tell them, look, this is what's going on. We know it. Stop it.
Yeah.
Pass legislation to get rid of the executive order which formed under President Reagan in August of 1988, the President's Working Group in Financial Markets. Bring it to an end.
The plunge protection.
We don't have any free markets.
Yeah.
Start getting on the case that we know what you're doing. Now, maybe you don't care, but we're going to let you know that someday this thing is going to come to an end, and you people are going to be tried in court for what you've done, stealing from the American people.
Right. Well, I think as it relates to the mining shares, too, they will probably, the market forces, will correct these prices, and they will go to their true net asset value. They will go to where they need to go, just like silver has. I mean, the silver suppression has not been ended by the CFTC, and yet silver is finding a more reasonable price. It's finding its true market value price, regardless of the suppression. And I think we'll start to see that in the gold and silver mining shares. Bob, I've got a couple of silver mining company stocks that are trading as though silver's at 15. You can make an argument right now these stocks should be worth triple what they're worth. So,
and you know what's worse? It's all encompassing. They've gone after everything. Even the mining companies that don't have anything yet, but think they might. It's incredible. I've never seen anything like it.
Right.
But this is what you have when you have a corporatist fascist society. What 1930s and 1940s in Germany under Adolf Hitler was all about was a trial run for what we're getting today.
This concludes part 1, guys. Click here for part 2.